So I said to you guys, I'm going to share the evolution of one of my portfolios on a weekly basis. So here it is. Now, the broker I'm using is Interactive Brokers. If you haven't done so already, make sure you guys go ahead and hit that top link in this video description. Open up your free account with Interactive Brokers. Right, it's the broker I use. They got every single thing that you guys need to go ahead, trade the markets and build wealth. Okay, so the market has gone up a lot from the last time that we did a portfolio run through. So naturally the numbers are going to be higher. But if we dive into the details, there are some interesting things that are going on underneath the surface that I am doing, strategy related. That would be very useful for you guys to know. Okay, so a lot of things are going to look the same. There are some positions that have been closed out. There is one position that has been opened up. Now, a lot of the activity, or I should say all the activity, okay, the buying as well as the selling activity has all been done in relation to selling of puts. And I told you guys the benefits of selling puts. I told you guys why all of you need to be selling puts. And if you're not already selling puts, you should be aiming to go ahead and sell puts. If you're not, just leaving money on the table. Now, most of the entries, most of the items in this portfolio are sold put positions that are currently open. And pretty much all of the gains I've made this year in the markets in this portfolio has come from selling of puts. So all the stocks that I bought, they're pretty much flat. Okay, so they've gone on rallies, they've come back down to the starting point, I've gone back in. So there's no return, there's no real return made on stock positions that I bought. However, I have made thousands every month from selling of puts. Okay, so all the value gain in the portfolio has pretty much come from selling the puts. That's why it's important for you guys to do it. Okay, cool. So the only new item here is the first one that you guys can see, and that is the sold put on semiconductor, and that's actually what we got into today. Right, I posted that over at the Discord. So a couple of $100 will be collected on that particular move in due course in a few weeks' time. Now, on semiconductor is one of the best semiconductor stocks for a couple of reasons. One is their valuation, low valuation, forward PE like 11 times, something like that. And the market's looking a little bit on the shaky side of things right now. So that could very well drop to below 10 times. Now, if you compare that, a PE below 10 times versus the overall market, you're getting a cheap stock that's growing multiple times faster than the overall market is. And they're positioned nicely, okay? So they make chips for these cars and these vehicles. And as I told you guys last time, that's going to be a major theme. If you're watching the major themes, you're going to do very well if you're positioning your capital into those major themes right now. So it's all about forward thinking. So those who are making moves on semiconductor are going to be very successful, mark my words. Okay, so on semiconductor, I actually want to get into the stock. I don't own any on semiconductor right now, and a lot of the moves I've been making with regards to on semiconductor is selling the puts. Someone actually asked me what's the downside of selling of puts, and no one has told you this before, and you'll never hear this. The only downside to selling of puts is it can make you a little bit complacent when it comes to buying of stock. That is because, let's say on semiconductor makes a new 52-week low. That 52-week low will be around $45, something like that, just below $45. That will mark a new 52-week low. So if you're a put seller, which all of you should be, if you see on semiconductor any stock at a 52-week low, what's going to happen? You're going to go ahead and sell a put out of the money somewhere at like $35 strike price or something like that. Okay, so you'll load up on some sold puts, but you won't go ahead and buy the stock. So that's the thing. That's the only downside of selling puts when you have the right strategy. That is, you're choosing stocks that you want to own and you're sitting it far out of the money below certain technical levels. Cool. All right, so that's on semiconductor. Now, there's other puts that I've sold in here. I call them legacy puts that I've sold now because these were sold like weeks ago. So very few moves have been made by myself because the market has gone on this run. Because the market's gone on this run, it hasn't allowed me to deploy the moves that I like to make. That is buying these distressed stocks as well as selling puts in that type of situation, these high volatility environments. When we're in an environment that's low volatility, when we're in an environment where stocks are just running up, that's boring. Yeah, that's boring because you can't really make any moves. All you can do is just sit back and watch your numbers in your portfolio climb. You make the real moves when you get these high volatility environments and you see stocks coming down. That's when you can strike and make strong moves that when you get these rallies, then you'll reap the rewards. So I've just been kicking back, waiting for some high volatility in the markets. So very little moves have been made. So all of these puts that have been sold that you guys can see right now, these are all legacy moves. These are all moves that you saw last time round. The only difference is, as time has gone by, these contracts have decayed. So the percentage of that premium collected has gone up significantly. So if you check the last video and check the percentages on the right hand side of the screen, in the last video, they would have been like, I don't know, 10%, 20%, 30%, 50%. But now you're looking at them, they're like 80%, 90%, very close to 100%. So pretty much all the premium has been collected from these moves. That's the beauty of selling the puts. You go ahead, sell that put, just wait some time, you collect your money and you move on, you repeat the cycle, you repeat the strategy. All right. So I am waiting for high volatility environments to then recycle this same move. And that environment is surely coming. It's only a matter of time. Just takes a little bit of patience. Now, some puts that I've sold have been closed out. Okay, that's the difference. So normally when I'm looking at my portfolio, there's like 10 to 12 entries of sold puts. Right now, if I tally these up, there's about 7 puts that I've sold that are currently here. Okay, so all of these will be closed out. So that'll give me that collateral to then go and recycle that move and open up around 10 to 12 new puts sold on different stocks. And I normally pick up a few contracts in each. Okay, that's how I create the couple of thousand value creation every month for the portfolio. All right, let's talk about some of the stocks that I own in here. Now, Apple, Tesla, those are the two first entries. I would not pick up Apple here. I'm not happy with the Apple valuation where it's currently at in the current environment, in the context of the environment that we're in. Okay, I would need to see the Apple stock price come down a lot more, so it's closer in terms of valuation to where the semiconductor industry is right now. That would give me more confidence that the valuation actually makes sense, because right now picking up Apple doesn't really make sense to me. Okay, the valuation it's come down, but it's not at what I'll call super attractive levels. And I don't think Apple is in a place right now where it can deliver like superior earnings and showcase to the market that it's just firing on all cylinders. So therefore, I don't want to pick up any Apple where it's at. So I'm just holding back. So I do think you've got to be pretty patient with that one to really get the great entry price. Now, obviously, Tesla has made waves. Tesla's had, a big week off the back of the earnings and the run up in the stock price. I don't know who is buying Tesla at this current price point and why they would buy it at this current price point. This to me just looks like that classic move where you get the earnings pump and then you get the profit taken after that. Okay, you don't want to be caught at the top when everyone takes the profit. Doesn't make sense. And I spoke to you guys about the Tesla valuation last time. Okay, it's got a very uncomfortable valuation. Now it's good to see Elon go ahead and reiterate that 50% guidance. That's a strong move. That's a bold move. That's actually not a move that I expected him to make, but he made it anyway. So I wouldn't pick up where it's at right now. Qualcomm. Qualcomm's one that I want to talk to you guys about because this is a stock that's gone on a major run. And it's good to see now the stock getting market recognition, because for a while it was down. Nobody wanted to know Qualcomm. And for, you could say, valid reasons. Yes, they are heavy in the smartphone space. Smartphone space is going through a bit of a slowdown right now, or a corrective phase right now. Fine. But the valuation is one of the most attractive in relation to the whole semiconductor industry. That is huge. Not only that, as I told you guys in the beginning, if you are looking at where we like sectors in the couple of years time that are going to be really kicking off or are going to see continued progressive growth, Qualcomm is making some interesting moves under the surface. So even though they are known right now for being in the smartphone space, chips for smartphones, a lot of what they're doing is to capture market share in other verticals in the semiconductor space. So one being 5G and a major one being the vehicle space, where ON is also operating and doing very well. Now, it's going to take some time for these partnerships to come to fruition, but when they do, that's where you're going to see the real value add from buying Qualcomm at not these types of levels, lower than it's currently at, okay? Because I was buying it when it was at its 52-week low. Now it's a little bit higher than that. So haven't bought it. And what could really happen, yeah, is this. You could get earnings surprises. I actually wanted to do this video a day or two ago. And I was actually saying to the guys over the Discord, you're going to get earnings surprises to the downside. Okay, you saw Tesla move up, and you saw another company before that move up. I can't remember on their earnings. But what generally happens in earnings season is if you start off earnings season and you get companies like rallying, you normally get some downside surprises, and then the reverse is true. If you get downside surprises to start off, there comes a phase where you start to get upside surprises. Cool. So Qualcomm could deliver a downside surprise. Now that would be great. I would like that to happen because then I can make some moves, and in time, all that value would then show itself. Okay, so I'd actually like to see Qualcomm come down. I would like to see the market scared that the smartphone space is normalizing and slowing down. Great, even better entry point. But currently, where it's at right now, the current price, if you open up Qualcomm, that is a cheap price point. I'm telling you guys, that is a cheap price point from a valuation perspective. However, it can still come down lower. Okay, if it trends down closer to those 52-week low levels, that is where I'll be making moves. But from a fundamental point of view, the current valuation of Qualcomm is still very low, despite the run up it's had. Not like there's a lot of the market, majority of the market, you couldn't say that for, but you could say that comfortably and confidently for Qualcomm. Okay, Nvidia has been making moves. Look, as it relates to, you know, which semiconductor stock is my favorite, or which ones am I focusing on, Nvidia is not one of my favorites, just because the valuation looks a little bit toppy. It's like you can get all you can get in Nvidia for a better price point with an AMD, for example. So it's like, you know, you wanna go for a steak on a weekend type of vibe. There's two joints that you can go to, both taste great, both taste similar. One is just charging you 30% more than the other. So you're gonna go to the one that's 30% less. Okay, that's how I view it. But I still own it and I still like it, and they'll still do well with the entire sector in due course. Then you've got AMD, one of the best stocks on the entire market. They've gone on a massive run, literally over the Discord, right? We caught that bottom to perfection. Okay, I bought the low point, the 52-week low, and then the very next day when it moved up a couple of percentage points. Okay, I bought those two levels in this portfolio and another portfolio. So that is a stock that's high up on my priority list. That is a stock that's made that has generated a lot of value for me on the sold put strategy, and will continue to do so. I just need to see it come down a few notches as well. Okay, again, these stocks could deliver downside surprises. They won't all do that. Okay, they won't. All the semiconductor stocks won't do that. Some will move up, some will move down. They're not just gonna do the same thing. But I'm telling you guys, some of them will deliver downside surprises. And if it does, it just opens up massive opportunities. Cool. Microsoft, they're delivering their earnings next week. I'm just waiting to see what they say. If they come down a little bit, that'll be more attractive, more compelling levels. But with Microsoft and with Google, they've got that cloud business. They're going to do exceptional things, over the next couple of years. And those are the units to definitely be keeping an eye on in relation to their businesses. Why? Because they're smaller components of their business that will grow, and they will progress, and they will advance as well. So interesting things with those companies. And then Google's the biggest stock in this portfolio, taking a hit today in relation to Snap, but that's not necessarily a bad thing. Now, my expectation is this drops under $100. Okay, under $100, where I do believe we're going to see Google go. I'm looking to make moves pretty soon on Google if and when it does get to those types of levels. So it's good to see the market cooling off, because the movement that we've been seeing over the last couple of days really did not make too much sense. And when that happens, it's quite annoying, because it doesn't really make sense. You just have to be patient and wait for things to roll over. So that brings me to the end of the portfolio. So no real major moves made. A couple of moves made on the selling of puts strategy, but we get a high volatility environment. That's when I'll make the majority of my moves, and that's what I've been doing this entire year.